morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, I'm starting on the hourly because a couple things I want to point out. I want to thank everybody for joining the webinar yesterday on trading the opening rotation. We were able to really talk about the stuff and really just hone in on that opening hour and a half of the day. So the recording will be up soon. If you haven't seen it, check it out. And if you really want to talk about how to trade that stuff and really want to get into the real nuts and bolts of it, come check us out. We would love to meet you. So first thing is 25.53 half here and here. They rejected this one. They're trying to trade back from this one. So you got a potential double top. Okay. That said, you have consistent dip buying here, 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 and potentially here. Okay. So we're pulling back from a marginal new high. The bulls want the dip buy. The bears need to get below 44 quarter, which is yesterday's Globex low. When you get out on the daily, you can see that the band ride's over. It was barely over on Tuesday. It's definitively over now. And what you need to start seeing are lower lows versus the prior day low. If you can see that, then you can start talking about the potential to retrace maybe a little bit. You got the 9-day simple moving average here. We're on a collision course with that as a function of time more than a function of price. We talked about that yesterday. And how price reacts to the blue line here is going to be critical. Is it going to fight over it for a few days, give us some two-sided trading, or is it going to bounce and go? Or does it fail, become resistance, and open up a move back to the daily midband? Any one of those three scenarios is very plausible. But if we don't come in contact with it today, I would expect contact with it tomorrow, Monday the latest, because as it sheds these lower prices and we flatten out up top, just the function of the moving average itself is going to bring it in contact with price, unless we really take off. So I said this a few times in the chat room yesterday, and I want to reiterate it for everybody out there. The market, as of 8:27 in the morning Eastern Time, October 19th, doesn't want to go down. We may want it to go down. We may think it should go down. We may think that it's earned the right to go down. None of that is true. Okay? The market will pull back when it's ready to pull back. The market will pull back meaningfully when there is some kind of an event that causes the market to do that, where there's a concern related to the economy, where there's a concern related to the tape itself. So far, there's nothing happening that is causing any more than these intermittent dip buys that we see. We'll zoom this hourly chart out. You get a bunch of intermittent dip buys. Dip by dip by dip by dip. I mean, look, here we go. And that's because these dip buys continue to be bought. Dip buys, mid-band support, compression, expansion, dip buy. Low 40s continue to hold. Just the comments on this chart in and of itself let you know what the sentiment of this market is. That sentiment will change when it's ready to change. That sentiment will not change when you want it to change. And shorting it 37 times every day isn't going to help. Because part of the problem is there are so many weak shorts in this market that get spooked out like a bunny in a backyard that it forces things up to new highs. It's a concept in the room that we call rinse and repeat. It's just a gigantic prolonged rinse and repeat. If you take that daily chart that I showed you and you pretend that it's a 5-minute chart or a 15-minute chart, then you'd say, well, it's a trend day. Then trade it like a trend day, okay? The first shot across the bow for a potential pullback would be the conversion of the 9-day simple moving average and the ability to make lower lows from the prior day. Okay? Until that happens, buying these dips is going to continue, maybe not to pay as much as you would like it to pay, but it will keep you on the correct side of the tape, and that will save you money over a period of time. And then when the volatility picks up, you'll be in a position both mentally and from an account perspective to take advantage of it. All right. Everybody have a fantastic day. There will be a midday update today. I will catch everybody then. Check out the recording of the webcast and come see us. Take care. Trade them well. See you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.